Based on predictions and analyses from leading crypto firms, analysts, and financial institutions, 2026 is shaping up to be a year of major structural shifts for Bitcoin and the wider digital asset market. The narrative is moving beyond simple price speculation to focus on deep integration with the global financial system. Here is a breakdown of the key trends and opposing views that are likely to define Bitcoin's story in the coming year. Key predictions shaping 2026. Here are the core themes experts are focusing on for the year ahead, covering market cycles, regulations, and national adoption. The end of the 4-year cycle? Several major firms, including Grayscale and Bitwise, predict that 2026 will see Bitcoin break this 4-year cycle. They argue that with the influx of steady institutional capital through ETFs, the market is maturing, which could lead to less dramatic volatility and a more sustained bull market. Nation-state adoption and treasury shifts. One of the more ambitious predictions comes from Gemini, which suggests that at least one country might convert part of its gold reserves into Bitcoin in 2026. The reasoning is that nations seeking to diversify away from the US dollar or with high gold to GDP ratios could be attracted to Bitcoin's advantages of instant transferability and verifiability. Policy and regulation as a catalyst. The regulatory landscape in the U.S., set in motion in 2025, will move to implementation. Two major laws are in focus. The Genius Act established a federal framework for stablecoins. Rules for issuers on capital and liquidity are expected in the first half of 2026. And the Clarity Act aims to define regulatory jurisdiction over crypto. Its passage in 2026 is seen by many, including Grayscale, as a major potential catalyst for further institutional investment. The bull versus bear debate for 2026. Analysts are deeply divided on Bitcoin's price direction, creating two competing narratives. The bull case. Proponents point to strong structural foundations, constrained supply. Post-2024 halving dynamics are in full effect, and a significant amount of Bitcoin is locked in long-term holdings like ETFs and corporate treasuries. Institutional demand. Despite a slowdown in late 2025, over $50 billion flowed into spot Bitcoin ETFs in the preceding year, and most of that capital remains. Firms like Fidelity point to continued corporate adoption, with publicly traded companies holding about 5% of Bitcoin's circulating supply. Macro support. Expectations of Federal Reserve rate cuts in 2026 could improve liquidity conditions, which historically favor risk assets like Bitcoin. Elon Musk's prediction of a U.S. economic surge by late 2026 has also been noted by optimistic traders. Major price targets. Bullish. IG/JP Morgan analysis, $120,000 to $170,000 based on ETF flows and constrained supply. Fundstrat, more aggressive, with targets above $400,000. Bitwise and Grayscale predict new all-time highs will be set in 2026. The bear case. Skeptics highlight several warning signs suggesting a potential downturn or prolonged correction. Technical breakdown. Bitcoin broke below its key 365-day moving average, a long-term trend indicator it had held since early 2022. Weakening demand. Metrics show demand growth is slowing, U.S. spot ETF inflows have lost momentum, and Dolphin wallets, holding 100 to 1,000 BTC, have been reducing exposure. Historical pattern analysis. Some analysts, like veteran trader Peter Brandt, believe Bitcoin has completed a 5-wave rally and could be entering a longer correction phase, potentially revisiting the $60,000 range or lower. Major price targets. Bearish. Peter Brandt and Fidelity's Jurrien Timmer, potential revisit of the $60,000 range. Be-in crypto analysis. In a full bear scenario, historical data points to Bitcoin's realized price near $56,000 as a potential long-term support zone. The bigger picture. Bitcoin joins the financial mainstream. Beyond price, 2026 will be defined by Bitcoin's continued integration into traditional finance. Banks embrace crypto. Large banks like JP Morgan are preparing to accept Bitcoin as collateral, and others are building crypto trading and settlement products. The crypto bank emerges. Regulatory shifts have led to a wave of applications for national trust bank charters from digital asset companies, moving core services like custody and stablecoin issuance inside the regulated banking perimeter. Focus on real utility. The conversation is shifting from speculation to utility, with stablecoins for payments and real-world asset tokenization expected to take center stage. How to monitor the 2026 market. To navigate these competing forecasts, you can watch these specific indicators as the year unfolds. For bullish confirmation, ETF flows, a sustained return of net inflows into U.S. spot Bitcoin ETFs. Policy progress, passage of the Clarity Act in the U.S. Senate. Macro conditions, confirmation of Federal Reserve rate cuts and strong liquidity. For bearish warning signs, price levels, a sustained break below key support levels such as $84,000 or $70,000. On-chain data, continued distribution by long-term holders or whales or dolphins, and falling exchange reserves. Leverage unwind, a return of negative funding rates and high liquidation events. In summary, 2026 presents a crossroads. It could be the year Bitcoin definitively matures into a less volatile, institutionally dominated asset, or it could follow historical patterns into a significant correction. The outcome will likely hinge on the balance between continuing institutional demand and the potential exhaustion of the current market cycle. If you are interested in a specific aspect, such as how stablecoin regulation might unfold or what bank adoption means for investors, I can provide a more detailed analysis on that topic.